It was a good week for the stock market. The major indices finished higher. Tech stocks led the way. There were some concerns about interest rates, but overall, investors were feeling optimistic. This week saw some big news from companies. We also got important economic data. Let's dive into the details. The market is always moving. It's important to stay informed. That's how you make smart investment decisions. Now let's take a closer look at the numbers. The S&P 500 rose by 1.8% for the week, marking a significant upward trend in the market. The Dow Jones Industrial Average gained 1.2%, reflecting a steady increase in investor confidence. The tech-heavy Nasdaq Composite Index surged by 2.5%, driven by strong performances in the technology sector. These gains came after a volatile few weeks, where market fluctuations kept investors on edge. Investors are closely watching inflation, as rising prices can impact corporate profits and consumer spending. They are also looking at the Federal Reserve's moves, particularly any changes in interest rates that could affect borrowing costs. Despite the recent ups and downs, the market is still up for the year, showing resilience in the face of economic challenges. The S&P 500 has gained over 15% in 2024, a remarkable achievement considering the economic uncertainties. These positive returns are a good sign, indicating that investors are optimistic about future growth. They show that the economy is strong, with robust job growth and consumer spending driving the market forward. Investors are confident about the future, believing that the current trends will continue to support their portfolios. The tech sector was on fire this week, showing remarkable growth and resilience. Apple, Microsoft, and Amazon all hit new all-time highs, reflecting their strong market positions and investor confidence. These companies are benefiting from strong demand for their innovative products and services, which continue to captivate consumers worldwide. They are also innovating and expanding into new markets, constantly pushing the boundaries of technology and exploring new frontiers. On the other hand, the energy sector struggled significantly this week, facing numerous challenges. Oil prices fell this week, driven by a combination of factors including geopolitical tensions and market dynamics. This was due to concerns about oversupply, which have been exacerbated by fluctuating global demand and production levels. The energy sector is highly sensitive to changes in oil prices, making it vulnerable to market volatility and economic shifts. This divergence between tech and energy highlights the importance of diversification in investment strategies. Investors should not put all their eggs in one basket, as relying too heavily on one sector can be risky. A well-diversified portfolio can help weather market storms and provide more stable returns over time. Now let's turn our attention to some important economic data, which will provide further insights into the current market conditions and future trends. Section 4. Numbers paint a positive picture. This week saw the release of several key economic indicators, which have provided a clearer picture of the current economic landscape. The unemployment rate fell to 3.5%, marking a significant improvement from previous months. This is a sign that the labor market is strong, with more people finding jobs and contributing to economic growth. Consumer confidence also rose to its highest level in 2 years, indicating that people are feeling more optimistic about their financial future. These positive data points suggest that the economy is in good shape. Consumers are spending more, which in turn boosts business revenues. Businesses are hiring, reflecting their confidence in sustained economic growth. This bodes well for corporate profits and stock prices, as increased consumer spending and business investments drive market performance. However, there are still some risks to the outlook. Inflation remains a concern, as rising prices can erode purchasing power and affect overall economic stability. The Federal Reserve is expected to continue raising interest rates to combat inflation, which could have implications for borrowing costs and economic growth in the coming months. Section 5. Investors. Feeling good. Despite the risks, investor sentiment remains positive. The CNN Fear and Greed Index is currently in greed territory. This indicates that investors are bullish. This positive sentiment is being driven by strong corporate earnings. It's also fueled by a healthy economy. However, it's important for investors to stay disciplined. They should not get carried away by the hype. Now let's look ahead to what's on the horizon. Section 6. Looking ahead. Next week will bring more earnings reports. Investors will be watching closely. They will be looking for signs of continued growth. We'll also get more economic data. This will give us a better picture of the economy's health. The stock market is always unpredictable. However, by staying informed, investors can make smart decisions. They can position their portfolios for success. That's it for this week's market wrap-up. Stay tuned for more market insights next week.